Well, these numbers were highly anticipated because it was the first time that investors and economists would be able to get a sense as to whether or not the trade war was having an effect on the Chinese economy. And it looks as though there's some evidence to suggest that it's already starting to begin. So the Q3 GDP expanded by 6.5%. It missed expectations, but what's really interesting was the exports. So exports for the quarter look surprisingly strong, but the industrial production continued to decline and dropped again in September by 5.8%. And what's happening is that manufacturers have been front-loading their shipments because they want to get ahead of the tariffs. And the fact that the factory orders were weaker suggests that that pop in the exports is only temporary. Now, despite the economic slowdown that we're seeing, the stock markets rallied at the close, and that's because top financial officials were coming out in support of the stock market. The chiefs of the central bank, the banking regulator, as well as the Securities Commission, all were talking about how the poor performance of the stock market has very little to do with economic fundamentals. And they also announced various measures to get more funds, including private equity, to invest in the stock market. In addition to that, the Vice Premier, Liu He, who's been the right-hand man of President Xi Jinping on the economy and also the one in charge of the whole trade discussions with the U.S., he weighed in as well, saying that the U.S.-China trade war has had some impact on market sentiment, but that the U.S. and China are in touch. And he also said that he's been following what foreign institutional investors have been saying, and he says that he agrees with what he says that they're saying, and that is that longer term, all of this sell-off in the stock market here is actually good for the Chinese stock markets, and that this is a good investment opportunity.
Okay, Eunice Yoon, thank you. Can I just ask one question? I don't know if we have time for this, but in terms of the overlay, in terms of what this means to the relationship with the U.S., in terms of the sort of leverage, if you will, in this larger trade war, trade negotiation, how do you think this is going to play this morning, both where you are or at night where you are and in Washington?
Are you talking about the economic slowdown?
Yes.
Are you talking about the economic slowdown, how that's going to play?
Yes.
Yeah, I think that right now a lot of Chinese officials are concerned about the way the economy is going because the numbers that we saw today just make things so much more complicated for policymakers. On the one hand, we're seeing that they want to have a slowdown. They've been kind of engineering it because they've been trying to deleverage and get a lot of the problems out of the financial sector. On the other hand, they now are facing what a lot of people here believe is going to become a protracted trade war that's going to last sometime into next year. And there's a lot of concern as to just how many measures they could put in place before you start having issues, which they saw back in 2009 after the financial crisis. They stimulated way too much, and they're still dealing with a lot of those problems. So they don't want that to happen. At the same time, they've been very careful and moving ahead to try to safeguard the economy, because they do see a lot of issues with the way the economy is going.